Georgia Alfredas.
And I'm Dave Matthews, and this is What's Next Wall Street.
Did you notice?
Well, wait a minute. Who is that? Bo Derek?
Bo Derek wears cornrows. This is more like Janet Jackson, Poetic Justice.
Oh, okay,
Thanks
Ray
for
Ray.
noticing. Wow, this is wow. Anyway,
All right, it looks good.
Yeah,
Hey.
vitamins. This isn't a show about my hair, though. This is a show about winning trades.
Well, we want to help you learn about Georgia's hair and trading in a fun, entertaining, and most importantly, a useful way.
That's right. We're going to talk about all the hot new trending products and services that we think you'll not only want to use, but also invest in.
We'll also cover the fundamentals of conditioner and companies to make you an informed trader and make it easier for you to target investment potential. Plus, we'll share our thoughts on where the charts and indicators say a particular stock is going.
So all this info can help you create a tailored trade plan and stay up to speed on what's next Wall Street so that you can stack your gains. There's just something about this hair. I can't help touching it.
It looks
like,
really
I see
heavy.
why people are like, it is heavy.
Yeah. Well, you can email us at optionsplayers.com or hit us up on social media at What's Next Wall Street with your questions. We can also direct you to the instructors and experts over at Options Players who do the trading fundamentals so they can get you up to speed on stacking your gains.
That's what we want to do. Yeah. How about Stock Minute?
Let's do this. Jump into the show. The NFT marketplace peaked on May 3rd when $102 million worth of them were sold on a single day. Crypto collectibles accounted for $100 million of those sales, but according to data analyzed by Protos, just $19.4 million in NFT sales, including $9.2 million in crypto collectibles, were processed recently, which is a near 90% collapse from the market's peak just 1 month ago.
Oh my gosh.
This is clearly bad news for lovers of crypto collectibles like Meow Kitties and whatever. But you hear lots of people proclaiming that NFTs are dead. Remember, NFTs is a specific type of smart contract. While all crypto collectibles are NFTs, not all NFTs are crypto collectibles. Follow that?
Kinda.
In fact, some NFTs are used for music, you can buy albums, and even live events are talking about using the smart contract structure. Smart contracts are a core component of DeFi, or decentralized finance, which is what all the kids are calling it. So this is just getting started, this whole world around DeFi and NFTs.
Okay, so maybe the meme gold rush isn't over just yet, Dave. I mean, ours hasn't even sold yet. However, I'm pretty sure my mom is like the only one who bid on it, but I digress.
She's talking about our NFT on the wall.
Exactly. The iconic Doge meme sold at auction as a non-fungible token, or NFT, for $4 million, making it the most expensive meme NFT of all time. Now, this meme has been around for a decade, but it made a comeback with the rise of Dogecoin over the past several months, right? So a kindergarten teacher first posted this photo of her beloved and now famous pet, Kabosu, back in 2010. Because of that, Know Your Meme was able to authenticate the meme for NFT, or meme NFT, for the first time since that kindergarten teacher is the one who actually auctioned the photos of Kabosu herself. Meanwhile, the Securities and Exchange Commission is considering a significant crackdown on so-called meme stock investing, which is the most speculative of all the coins.
Yeah, this could lead to more regulation of low and no free brokerages that have been at the heart of processing these risky stocks. SEC officials have been talking about whether they could require brokerages, it's easier for me to say, like Robinhood, to warn investors about potential dangers of buying these cutting-edge securities, even before that trade's completed. But remember, they're also mining all of your trading data to see which trends are picking up steam. Today's What's Next Wall Street Pro Tip is brought to you by optionsplayers.com. If you're new to trading, there are a lot of terms thrown out that you may not be familiar with, like IPO. An IPO is an initial public offering, and it's when a privately held company makes its shares available for trading on public markets, such as the New York Stock Exchange or NASDAQ. Those initials stand, again, for initial public offering. Now, going public is a way for a company to raise capital to expand their business and allows a nice bonus for those who are working at that company for years to ensure its success, to make a little money. Now, with an IPO, bankers are in control of the pricing and take home millions in fees, sometimes at the cost of the employees, who might even be upside down with share prices after the market settles down. A new trend, which started in 2018 with the online music service Spotify, was to issue what's called a direct listing of stock. This took the existing shares right onto the NASDAQ market. No middlemen were there to control it other than the floor traders themselves. Now, the best part about this is no new shares were created, so therefore there was no dilution from the banks, which can hurt with an IPO. Now, you really need to have a lot of wind in your sails to do a direct listing. Spotify had a global customer base, unlimited capital.
Yeah, they literally had a rock star brand with like 70 million users. Now, as you may know, the biggest stock market gainers typically make their major price moves within a few years. So don't get FOMO for your favorite IPOs.
I like that. Now, do you remember even the Facebook was a dud with their IPO?
Yeah.
Now, Coinbase continues to be a big success due to its attachment to alternative coins, which still have a bit of complexity to buy on those public markets. At Options Players, we reduce risk and still reap big rewards by waiting for the stock to prove itself before investing. This can establish a trading history and will dramatically reduce your risk and still leave you plenty of opportunity if you're correct, while lessening the chance of instant bag holding, and not the kind of bag that Georgia holds.
Okay, there's
the nice
never.
ones.
Oh, okay, okay. Well, I'm super excited about our next guest, and surprisingly, it has nothing to do with bags, although I virtually shop every day of my life, but that's for another show. So today we have guest Jonathan Ovadia, co-founder and CEO of XLab, and XLab is a virtual reality technology studio. Welcome to the show, Jonathan.
Hi, Georgia. Thank you so much for having me. And
Okay,
thanks, Dave.
So I kind of explained what XLab is in like that with like just a really quick definition. You tell us really what XLab is.
So XLab is a virtual reality technologies and gaming studio. We're currently developing a franchise called Veil. It's poised to be the de facto competitive shooter and social experience in all of virtual reality right now.
Wow.
So FPS, is that your world? Like first-person shooters?
Yeah, first-person shooters. So it's think Call of Duty inside of virtual reality.
Wow.
But what makes it interesting about virtual reality is that we're reimagining gamers lobbies. And what that means is that traditionally when you'd be playing video games with your friends, all you would have is voice chat. But now with the virtual reality technology that exists today, you can actually be fully present and immersed inside of your Call of Duty house, or Veil Armory as we call it. And we find that most people spend more time hanging out, messing around, shooting guns, playing chess, ping pong, you name it, inside of their homes with their friends than actually going out and playing the game. So it's really,
okay, so let's talk about this.
Happening.
So you're letting people build the world out for more than just the game itself? Like they can build hangout rooms or?
They don't get to build their own hangout rooms. We build the hangout room, as you call it. All the IP is originally built for the game by the developers in-house.
Okay, cool. But then how do they play chess? Do you have...
So you can actually have like when you go into your armory, you have a chessboard and you can physically walk around your house, invite friends or people over, and you can pick up with your hands. We have full finger tracking and full body animation system. So you can be walking in this virtual home and go and pick up pieces and move them around. And it's just, there's a plethora of things that you can do inside of these virtual homes.
That's amazing.
It's super interesting.
That's cool. I like that too, because it's not all the aggressive, like go around and shoot your friends. It's actually...
I mean, you can shoot your friends, but it also there's
no, you
other...
can. Look, the main aspect of the game is a traditional first-person shooter game, but what's fascinating to me, and for example, let's talk about Fortnite. Fortnite's a very big name. Everybody knows about it. More kids log into Fortnite just to hang out than they do to actually go shoot people. Fortnite realized this by studying their data, and they've been doing collaborations with very large artists, such as Travis Scott, and they're offering now video game concerts, and tens of millions of people are logging in to hang out and watch a concert inside of Fortnite, which is traditionally just a shoot 'em up game, right? But these kids are hanging out every Friday night. They go to their mothers or fathers. They say, "Can I get $20 for V-Bucks?" They buy an outfit. They go into this game and create a social world. It's fascinating what's happening right now.
So it's really about the community. So what you're building is more of a community, the game community.
It's all community.
That's
we
cool.
have one of the largest communities right now in virtual reality. We have a Discord server with thousands of people in it. We do live streams and hang out with pretty much everybody inside of VR. We've been doing that for almost 5 years now.
Wow. So back in the days of dial-up modems, there was Palace and Second Life, and those were flat screens, right? So you have the immersive version of that. What headsets are you compatible with?
We're compatible with any PC VR headset right now.
Cool. So it's got to be on the PC. So tethered.
Yeah,
it won't.
it's PC only. Yeah, it's
Cool.
not tethered. But something fascinating that I do love to talk about is this untethered experience. So I'm assuming you're familiar with the Quest 2?
Yes, that's the Oculus self-contained.
Yeah.
Everything's in the headset.
Yeah. So that is the most beautiful, life-changing piece of hardware for this industry. That headset has sold more headsets in the last 8 months since its release in October than all other headsets combined. And what it did is it allowed the entry price for virtual reality experiences to go from roughly $2,000 to $4,000 for a nice setup to $299. What this has done has just, it's completely taking it from early adopter to early mainstream. And the real bottleneck in the industry right now is actually not the hardware itself. Investments in hardware have far outpaced software. The bottleneck is the content. There's a lack of content for VR right now. What's happening is similar to when the iPhone first came out and the app, sorry, not the iPhone, the App Store for the iPhone, and everybody went app crazy and we're buying absolutely every app. That's what's happening right now. People are getting VR headsets first and then looking for content. The traditional route is, hey, mom, I want to play Call of Duty. Can you please get me an Xbox or PlayStation? So it's really interesting the situation we're in right now as an industry, and I'm very excited for its growth.
Well, what I'm happy about it is because of the isolation that people saw, I think anything you can do to bring people together with comfort and feeling safe, and obviously if you're wearing a headset, you're in your your phone home.
Yeah.
ET phone home. Easy for me
Your
to say.
virtual home.
Yeah, you're in your virtual home, but you can still hang out with people. And because of the immersiveness, because you can look around and you have spatial, optical kind of excitement for your brain, I think it's going to help with maybe some mental issues that we're probably going to see for the next few years around this, because you can be around people, even though you can't hug them.
Be around people.
You can virtually be around them.
Oh, wait. You think you can't hug them. You don't know the hardware that's being developed right now. There's full body haptic gloves, suits, you name it, treadmills.
Oh, wow, cool.
So since we're developing a game, we get hardware sent to us all the time for testing, and ideally they want us to implement it. But I tested something just last week. I can go and high five my friend and feel it. I can shake their hand and feel it. You pick up any type of weapon or any type of physical object in VR and you're literally feeling it. Same for the chest. If you get touched or shot, you'll feel like a little pulse and vibration. And you know, mind you, these are very early stages of the industry, but just to know that this is where we're at, I'm very excited to see where we go.
That's very cool. It's kind of like what Apple has with the watch. It has the taptic engine, so you get rubbed, knocked on your wrist. I played with some of this stuff at the MIT Media Lab years ago. They've been thinking about haptics for 20 years maybe. So it's good to see all this stuff coming mainstream.
So you know what I love about it is that your gamers can not only, they're in this community, so they're helping invest, right? They've invested in the company, and
yes.
That's really cool.
Yeah, so I can talk a little bit about that. So we have an amazing community of tens of thousands of gamers that are just obsessed and passionate about the space as much as we are. And we've been a very open and active development team. So traditionally, a development team kind of works on their game in quiet, full stealth, and then they make a really hard guerrilla marketing campaign a few months before release. What we've done is we've been open from day one, really speaking to everybody inside of virtual reality and getting everybody's feedback along the way. We don't even have anybody sign NDAs. We're completely public with all of our gameplay and with all of our current features. And we test it live with the community. And a lot of people, like we just had a stream last week where we had a few thousand people just tune in and give us feedback in real time. And what's awesome about that is that we get to create and build exactly what the players want. We're not guessing what they want. We're literally giving them exactly what they want. So we needed to, so now that the Quest 2 came out, right, and the market is exploding, we finally thought to ourselves, okay, it's time for us to really scale this up and take advantage of what's happening because of our first mover advantage, or early mover advantage. There are a few others, but they're already out, so we're kind of the only one that hasn't fully released and we're still in testing, and it allows us a lot of flexibility. So we launched a regulation crowdfunding campaign on a platform called Start Engine, and in about 30 days, we raised over $1 million from over 1,000 investors. And what's really beautiful about that is that we're one of the first, at least that I know of, first VR games that allow the community to actually own a piece of stock inside of the game that they spend. Some players have spent over 1,000 hours playing this game. And what's beautiful about that, it goes back to what you talked about, community being so important. We're getting to the point that we have such a strong community, and our community even owns a part of our company. And to give you an example, some of the top e-sport VR players in the world, sponsored by Facebook, Oculus, NVIDIA, Intel, you name it, they actually bought stock in our company, and that to me meant the world.
Yeah.
So now we have the community. The community also has stock in the game. It's going to be very difficult for another player to come and really one up us at this point, because some of my friends, they play games that suck, but they're playing it with their friends and the community's there. So that's really what it's all about. It's all about community. And by the way, our game does not suck. It's awesome. So I would love to invite you over to try it, or I can even send you an access key.
Oh, cool. Very good. Hey, where are you located? I like that view out.
I know, that's awesome. Where are you?
Thank you. We're located, I'm personally located in Miami, Florida. Half our team is in Miami, Florida, and the other half is working remotely from different locations. And Miami is just becoming this tech epicenter, and we've been moving more and more of our core members here, and everyone's very excited. The biggest issue right now is actually lack of apartments right now.
Yeah,
talk about this is the mayor's shirt, by the way.
Oh, good. So the mayor is really doing some tax breaks and trying to get companies to move to Miami.
Who doesn't want to move to Miami?
Incredible. The mayor is incredible. Everything he's doing for ours. I'm born and raised in Miami Beach.
Cool.
And what the mayor of Miami, Mayor Francis Suarez, is doing for our city right now is just incredible. He's attracted so much investment here, so much capital, so many good businesses, and now he's attracting a lot of tech startups, and they're doing a lot of really nice work for them, and I'm very excited to see where our city goes from here.
Nice. Well, I know a lot of people escaped from New York to go down to Miami during the pandemic, and now that New York is opening up,
now they're just staying. Yeah,
they're going to stay.
I don't know. A lot of them are staying. I was surprised. I thought that this summer people would leave and apartment prices would go down, but they did not. It actually just kept going up. So everyone loves Miami.
That's right. Well, thanks for hanging out with us today, Jonathan. We look forward to seeing more of what you're building in the lab there in the future.
Thank you.
No problem. Thank you so much. I appreciate it, guys.
So I love that. I'm super excited about that. Super cool. So this is the part of the show where we get to hear from you. Okay? So let's get into these emails. Of course, you can always hit us up on social media at What's Next Wall Street, or email us at WNW@optionsplayers.com. So optionsplayers.com member Michael O'Brien asked, can you better explain the effect of interest rates on securities and bonds, or like bonds, treasury yields, and the overall market? Great question, Michael. I cannot answer it, but I know somebody who can. Actually, that's actually a perfect question to toss over to Greg Kraus, lead instructor for optionsplayers.com. Greg, what you got?
All right, Michael, what are the effects of interest rates on securities like bonds, treasury yields, and overall market? That's your question. All right. So as interest rates rise, all right, then so do the bond rates. Bond rates rise, but the price of the bond decreases, okay? And that's a good thing if you're trying to buy a bond. You want it to actually be decreased, because we know what the future value of the bond is. No matter what, if you wait till maturity, that bond is going to sell for $1,000. So the lower the price of the bond, the better for you, right? You make more money. So bond prices have an inverse relationship with interest rates. Simple. So bond yields go up, interest rates go up, bond prices go down. That's going to happen, okay? Because I'm not going, if the rate of a treasury or the interest rate goes up, right? I'm not going to put my money into something that has risk when I can get it for free. So just know it's basically the government is price fixing what bonds are going to be, or at least the minimum price of the bonds will be. All right. Now, for securities, it's a different story. We all know anything can change the market. Consumer demand drives a free market, not monetary policies, although they do interfere with it greatly. Because if they make the interest rate really high, then you could just put your money in bonds, and it's much safer than, say, a stock. So, and that's because when you look at the debt equity side of a company's financial statement, it goes in the order of precedence who will be paid out first. Well, guess what? Bonds are considered debt, and shares are considered equity. And debt gets their money before shareholders. So just so you know, that's why there's less risk in bonds. So now, all right, so on to the shares. It's going to be all about the discounted cash flow. All right, so what that means is you have cash flow. So how much the company will make over a period amount of years, great. And then I know that, I'm going to spend this money, I'm going to make this much money. Well, then you have to discount it with the discount rate, or the weighted average cost of capital is what every analyst is going to use. If there's an analyst out there that's not using the weighted average cost of capital to do their analysis and cash flow, run away super quick, because basically they're telling you a company like Apple will have the same cost of capital versus someone like GameStop, which we know Apple is going to get probably one of the lowest rates possible, while GameStop, I wouldn't even buy a bond. All right, so as the increase in interest rate happens, the cost of capital also increases, because it's tightened when interest rates go up. It tightens the money supply, right? So more people might want to do it, but there's not as much, I guess you could say, there's serious competition, so the rate goes up that you have to pay. There's just not free money being thrown everywhere now. So that's going to cost you more. So in the end, you make less money, right? So if it costs me, say, $750,000 to make $800,000, and the interest rates go up, right? It will cost me more to get there because of the cost of capital, right? That's basically it. And nobody's out there just hoarding cash, throwing down cash. Almost everyone borrows money. Apple has probably just as more cash than everyone, right? But they still borrow money. They borrow money all the time. It's just easier. Not really going to get into the corporate finance class here. It just happens. So the cost of capital is what's going to drive it. And as interest rates increase, so does the cost of capital, thus devaluing that company's actual net present value, or its evaluation. So that does not mean that the stock price will go down, right? Because you got companies like GameStop, AMC, things like that should not be where they're at, but they are, because consumer demand drives it. It doesn't mean that those people are, they don't know what they're doing. It's just that's where they want to put their money. That's where it's going. All right.
Great. Told you I couldn't answer that.
Wow. Thanks for that, Greg.
Don't ask Greg a question unless you really want the answer.
I'm glad he's here. Greg, stick around. We may need you. So this next email comes from Joy in Tampa. Joy asks, when I trade options, I need to have a $25,000 minimum account balance in my portfolio. Otherwise, I'm limited to 3 trades a week. What can I do to increase my number of trades? Okay, Joy. A lot of traders opt to change their accounts to cash accounts. That way, options that are sold on the same day as they're purchased will clear at midnight. Now, this will enable you to use those same funds again the next day and essentially move the limits to each day versus the week. Now, this is really useful because if you don't, then you can get stuck in trades that you don't necessarily want to hold. Cash accounts are great for traders that stack their gains. Now, if you have a question, we have an answer, and it may not be from Georgia or me, but it will be definitely from Greg. You can always hit us up on social media at What's Next Wall Street, or email us at wnw@optionsplayers.com.
What's next to tech?
All right, this is important to listen to because the hacking group DarkSide shut down a 5,550-mile tube, which pushes 3 million barrels of oil and fuel along at the speed of 5 miles an hour between New Jersey and Houston.
Right.
The outage lasted 6 days, creating consumer panic gas buying at the pumps, rivaling only the toilet paper hoarding seen during the pandemic era. As the $5 million equivalent in dollars paid in Bitcoin ransom was paid to the operators of the Colonial Pipeline, many of us in the security industry had a bit of a WTF moment.
Yeah, I mean, normally you don't encourage bad behavior by paying these ransoms. And because there's no honor amongst thieves, meaning who's to say they would turn the pipeline back on it anyway?
That's right. So they essentially got root, which means they got control of the computers. But alas, the FBI had another unprecedented plan up their sleeve. Since all electronic transactions are traceable and carry a digital footprint, the FBI watched those coins get transferred between several online wallets. They traded these things like 9 times.
Wow.
The last of which contained 63.7 Bitcoins, and it was available online through the popular trading website Coinbase. So with the judge's approval, the FBI had the credentials for that account. They seized the account by logging into it, and those coins were sent to an FBI wallet. Those lost coins were prepaid by a hacker as a commission. So that's how they didn't get all of them. They lost a little bit. So they created this ransomware as a service, which blew my mind. So they have also, the ransomware as a service guys have had their servers confiscated, and they're now ceasing operations. Now, if these Bitcoins would have been in an online or an offline store like a thumb drive or a hard drive or through a non-US online wallet, this compensation by the FBI would have been much harder due to jurisdiction laws. Alas, since the coins were on US-based company servers, the US law enforcement teams outwitted the thieves, and only a 20% portion was lost.
Dummies. Those dumb thieves.
Right.
I'd never rob a store with them.
Now, there is some speculation that the price of Bitcoin dropped because of the whole, wait, it's not anonymous and untraceable. But this was a very public ransom takeover. But I digress. Now, I need to vent here. Now, many of these ransomware hacks come from a Windows PC that has remote control software like VNC, TeamViewer, or GoToMyPC installed for their real operators to log on from home. Now, all those are great services, but you know what this means?
What?
It means they're using their own weak security on a network that may have a stricter policy from their corporate IT overlord gods. And this is what allows the hackers in.
Wait, so you're saying they can access their work computers from their couch at home?
That's right. And what happens time and time again is if you're not safe, you don't use a two-factor authentication or something like a YubiKey, which I talked about on a prior episode, or even the free Google Authenticator app, which uses your phone as a second factor of authentication. Now, I, for one, am excited about WebAuthn, which is coming to iOS 15, the latest iPhone version that we don't see yet, but it'll be a test. And this will work in this form that you'll have 2 keys. One key you send to servers, that's the public key, and the other key sits on your phone, and it's never shared anywhere. It's just used to verify the public key when needed. In the future, you'll be able to use your Face ID or your thumbprint to log on to the digital world around you with just a single click or touch. No more passwords.
Easy, because I can't remember them anyway. So I feel like we should call my segment Celebrity News because somehow I always talk about celebs, right?
Well, I guess you can't separate your day job from your other day job.
Okay, yeah, I guess. Okay, it's been a really hard year for theaters and actors as well, my other day job. Anyway, COVID forced some chains like AMC to close its doors, and although they've recently opened again, the foot traffic just isn't anywhere close to what it used to be. So AMC might have the answer. Well, maybe not the answer, but an answer. Grammy Award-winning singer Chance the Rapper is releasing a concert with exclusivity in AMC theaters this summer. Now, the Magnificent Coloring World is going to be the first of its kind for AMC, as in a recording artist distributing a movie through AMC. Now, Chance released a holiday concert on YouTube last year, and he's not the only one. Lots of celebs are streaming and using social media platforms to release their new stuff. So AMC, in essence, has found a way to get around depending on Hollywood to provide entertainment. Consumers want more than just a film. There are a lot of films that are opening in theaters and streaming in the same day. Plus, there's like a gazillion funny videos and gaming and just stuff on other platforms.
Yeah, and I love the T Swift documentary. And theaters are going to need to modernize to get people, especially millennials and Gen Zers, to leave the comfort of their homes and actually go to the movies.
Yeah.
Now, one way is the Amazonification of the theater with ordering directly from their smartphones.
Right.
Speaking of day jobs, mine is helping food and beverage orders and even payment through your own mobile phone. And what we're doing with the Look theater chain is just that, replacing the old school paper ordering system that you have to write and turn on a light in the dark to get the server to come to you
Right.
is all going to be like an Amazon order from your seat.
Thank goodness.
But
That's
for food.
awesome. It's awesome because if millennials can't order it from their phones, they just don't even want it. So anyway, AMC might just have the money to breathe new life into their theaters. The meme stock is up more than 2,300% this year. We're talking about during a pandemic, y'all. It was up 95% the 1st of June. So the company's taking advantage of these new traders pumping up the stock by issuing new shares and taking the proceeds. And what do these investors get in return? Popcorn. Yeah, I'm not kidding. AMC is launching AMC Investor Connect, which is going to provide its shareholders special benefits and offers like a free large popcorn when they go to a movie in an AMC theater. So, are investors amped about AMC or nah? Let's go to optionsplayers.com lead instructor Greg Krause for an answer on this one. What do you say, Greg?
I don't ever get the easy ones. You know, you're going to give me all these meme stocks and AMC. Is AMC a good investment? I'm not putting any money into AMC. I might buy one share just so I get free popcorn, just to go in there and tell them, you know, I got my free popcorn. But I'm not even going to do that. It's not even worth it. But the reason, I mean, just look at the history of AMC. You don't need to be a genius to understand that pre-pandemic, this company's market cap, I would have to really go see what it was. I think it was a couple billion max. So before the pandemic, when theaters were busy, everything was going smooth, economy is at its highest, you were worth $3 billion. And now you've been shut down for a year, and so, you know, basically over a year now. You have $5 billion in debt with only $10 billion in assets. You're never going to catch up on that payment. Well, you would have never catched up on that payment. Let me tell you how they're catching up on that payment. What you first need to do as an investor is find out why. Well, because people just want to buy AMC. Is it a good stock? Nope. Take it outside. And as Mr. Wonderful would say, take it outside and shoot it, because it's done. That doesn't mean it won't stay an okay company, but as it's being ran now and in its current strategies, the company is finished. So let's really talk about why. Competitors. Their main input for movies and such like that came from Disney, other companies like that. Disney may not send their movies to theaters as much. They may save a bunch of them to promote Disney Plus. So now you have some of the largest earning movies not even coming back to the movie theaters. Okay, so that's going to affect it. Now, short term, you may see a lot of people running to the movies yeah, great. Well, guess what? My little small town out by the lake also has one really small movie theater, and nobody's there, and it's been open for like 2 months. Okay, so it is what it is. You know, I don't think it's going to be doing great, but let's discuss how they're going to pay that $5 billion debt. I want you to go back, whoever's interested, look at how many outstanding shares this company had. You'll quickly realize that it was just a couple years ago, they had 100 million shares around there. Now tell me how many shares they have today. You will see that they have about 500 million with no stock splits. They have issued shares by selling them to raise capital to pay off debt. Even the CEO has said that in interviews. So you buy the stock at, I don't even know what it's at right now. Let's just say 60, almost 60. All right, you bought this thing at $60. The same day, AMC sold 800 million worth of shares. I think it was like 20 million shares. 800 million worth for $40. But you just paid $60 for it. They just sold 20 million shares for $40. They cut you in half right away. So they're diluting it. And normally that would be okay if the company was profitable or was going to see a major thing that could actually happen. But that's not the case. if you go back and look just in the last month or so, they've sold hundreds of millions of shares. You went from having 100 million to 500 million shares, and the stock has gone up. And you're like, I'm doing great. I'm saving AMC. No, you're not. What you're doing is you're giving AMC money so they can pay back the banks and everyone else that got it. So yeah, you may be saving AMC, but you're not the one making the money. In the end, that stock's doomed. The ones making the money are the lenders to AMC that they're getting paid back. Now, I will say this about AMC. He's honest about it. The CEO has, came out and said, beware investors that they're trying to sell more shares to pay off debt. He's actually said that multiple times. And so that's a good thing that CEO's, actually out there telling you what's going to be happening, something that maybe your broker or someone should do. Okay. But the CEO is out there and he's telling you what it is. Now, when the CEO comes and warns you that they're going to be selling shares, that's probably a good sign that he's just covering his tail. But another thing is I think there was a large amount of shares that they were supposed to give to executives, a large amount of shares as bonuses. And instead of giving those to the executives, the board made the decision to sell those instead of giving them to themselves to pay off debt, right? So that is a positive. So they didn't take your money and then give it to themselves, all right? So, way, good job, right? But just know that, AMC, done ski.
How do you really feel, Greg? Well, we want to thank lead instructor at Options Players, Greg Kraus, for being here with us today. Remember, if you've got questions and you want the real answers, we can try and help you answer them, or we'll just send them to Greg and he'll tell you what's really going on.
We'd love to hear from you. Email us at WNW@optionsplayers.com or hit us up on social media at What's Next Wall Street. I'm Georgia Alfredas.
And I'm Dave Matthews, and I'm exhausted from that show.
Oh my gosh, that was a lot.
We'll see you next time on What's Next Wall Street. Thanks for tuning in.
Bye.